By now, you're probably familiar with the term credit score. It's a rating and it qualifies you to borrow a certain amount of money based on your number, and it determines what type of interest rate you pay on that money. Did you know, though, that your score fluctuates? The score most lenders use is called the FICO Score. Your FICO Score changes all the time based on your credit habits, and some actions count more than others. The 3-digit score is generally between 300 and 850. To get the best rates on the things you want, like a car loan or a mortgage or a higher credit limit or a lower credit card rate, a score of 720 is considered a minimum. So what can you do to affect your FICO score? First, pay your bills on time, because 35% is based on your payment history. The later you make payments, the more it will affect your score. If you have past due bills or worse, unpaid bills that go to collections, that's definitely going to lower your score. Try to make your loan payments on time, because if you default on a loan, it's going to lower your score. 30% of your FICO is based on the amounts you owe. It's best to keep your overall debt load down low. Having several credit cards that are close to being maxed out hurts your score, even if you're making monthly payments on time. And pay down your loans. Lenders like to see that you're paying down installment loans like a mortgage. 15% of it is based on your credit history. The longer your credit history, the better. If you're just getting started, pick one major credit card and hang on to it. Ask your credit union about options. They're likely to have the best rates. Established accounts show you've been a responsible, bill-paying adult, so don't close old accounts. Close newer accounts first. Another 10% is based on the types of credit you use. Lenders like to see a good mix of different kinds of credit, for example, a car loan, a credit card, and a mortgage. The last 10% is based on new credit. Each time you apply for a credit card, the lender will look at your credit score. If your report shows a lot of inquiries, it suggests you may be trying to supplement your cash flow. So don't apply for a bunch of credit cards in a short period of time. It will hurt your score. Having a better credit score makes your loans easier to finance, and you get lower interest and better financial services, and that saves you thousands of dollars in the long term.